Okay, so this next video lecture is still the continuation of our module 1. So we are still in the accounting records. So here we will be talking about the audit trail. Okay, so basically an audit trail is used for uh, making sure, or during the audit, may it be internal or external, okay, to make sure that the transactions recorded and presented in the financial transactions really did existed. It was properly recorded into the appropriate accounts and amounts, as well as if these are also valid transactions and were approved, okay, by the management. So here in the audit trail, so it needs to have the documents, the processes, and the records, okay, to verify the authenticity of the recorded transactions in the account, as well as its balance. So here we have the audit trail. First, of course, is to start from the source document. Okay, so as we mentioned earlier or in the previous video lecture, that this is the first source or the evidence, okay, of a transaction that took place. Okay, from the source document, the next thing that they should do is to record it, okay, in the journal, and then classify it in our general ledger, and then finally to our financial statements. Okay, so this is one way of having the audit trail. Or you can also do the reverse, meaning from the financial statements, okay, you can trace it to the general ledger, okay, and then from the general ledger, trace it again to the journal, and then from the journal, we will trace the source document of this transaction. So this is tracing. The first one is vouching, okay. So the accountants should be able to trace in both directions. Sampling and confirmation are two common techniques. Okay, so either way. Sample is this one. Example of tracing an audit trail. Verifying, for example, we will verify the accounts receivable. So from the accounts receivable control account in the general ledger, so we will look into the accounts receivable subsidiary ledgers. So basically, these are the sum of all the customers receivable. Okay, so from our ledger, we will locate the sales journal related to it, as well as the sales order or the shipping notice. Okay, and at the same time, aside from the sales journal and order and shipping notice, we will also look into the cash receipts journal, okay, for the collection, the deposit slip, and any remittance advice coming from our customers. Okay, so that's how we trace or verify the accounts receivable. So tracing, okay, of the audit trail, or tracing in an audit trail which verifies the accounts receivable. So basically, when we trace, if you are doing the tracing, you will begin with the end. Okay, so that's why we first look into the account control or the general ledger of the accounts receivable, and then lastly is your source documents, that is tracing. Whereas vouching, on the other hand, is starting from the source document up to the end product, which is the financial statements. So again, in any of this audit trail technique, the accountant or the auditor can use this. Okay. For the computer-based system, the audit trail is less observable because in the computer-based systems, there are less paper or document. Even the source documents sometimes are not included in the transaction. So that's why audit trail is less observable, and sometimes there are no audit trail at all. Unlike with the traditional manual system, you could see the entity is utilizing the source documents, the papers, okay, the journal, okay, the ledgers. Whereas in the computer-based system, we only use the computer and then we can generate reports or journal and ledger from there. Okay, so the data entry and computer program are the physical trail that they can have, and this data are stored in the magnetic files or in the cloud storage, okay, or in any other electronic storage. Unlike in the manual system, they have the physical file of the documents. Okay, so for the digital accounting records, here they have the master file. So basically, in the master file, this contains the account data. This is where the general ledger and subsidiary file are located. Okay. So we also have the transaction file. So these are temporary file containing the transactions since the last update. Okay. We also have the reference file. So basically, this is the constant information used in processing. For example, we have the tax table, customer addresses. Okay, so there we can, or the entity can refer if these transactions took place. We also have the archive file. So this contains the past transactions for reference purposes. Okay, so this is how your accounting record is digitally, okay, under the computer-based system. Okay, so if you will look into this illustration again. Okay, so those are for our accounting records, both for a manual system and a computer-based system.